Hey investors, welcome to the 40 Finance channel. We got a lot of moving parts in the stock market right now. You've got the Build Back Better plan and whether or not that's going to get approved and the effects on some of the stocks that were going up on the announcement of that. You also have, of course, interest rates in the short term and the long term. You have the COVID variant going out and what effects that might have on the economy. And on top of all that, you've got your end of the year tax loss selling. You've got a lot of questions about the valuation of the market in general. How high should we be paying for growth prospects as we enter, hopefully, into a new world where some of the other issues settle out? So there's a lot going on. And in my opinion, this really is a great time to think about maybe contrarian stock picks. So by contrarian, I mean, you wake up every day, you see a new headline, you see stocks that are getting beaten up, and if you're thinking about value and potentially about long-term investing, it might be worth it to entertain some of the picks that nobody else is looking at. One thing's for sure, in the scope of the long term, there are stocks today that are down significantly and show some low momentum signs that will actually be up and very strong 5 years from now. All right, so the point of today's video is just to give you some ideas for perhaps finding your contrarian stock picks. It's usually pretty easy to tell which stocks are highly in favor right now, which ones are going up. But this will have a few tips for you in here on how to look at ones maybe you've forgotten about because they're just not in the news anymore, and they may offer some opportunity if you decide to go through the full research. All right, if you've been following the stock market, you know that one of the hardest hit segments so far has been small cap stocks. And even today, if you look here, you've got the Russell down 2.5 versus NASDAQ at 1.75, S&P at minus 1.75 as well. So let's take a look at small cap stocks just by creating a simple filter, right? All we're looking for is ideas here. It's going to take additional research. You're going to have to go through and see what the company's made of and how the future projects. Small caps, I want a price over $2 just because I want to eliminate penny stocks. Estimated EPS growth over 9, so basically double-digit EPS growth, double-digit revenue growth. Now let's take a look at what we've got. I sorted it by market cap, but I'm also keeping an eye on this PE ratio because I want to really kind of keep my companies profitable. Personal preference at this point in an uncertain market, I'm looking for profitable companies. And let's just kind of eyeball what we have here. Again, this is not necessarily like my stock picks, right? These are just ideas, screeners to go through, trying to find the best value in a segment that has been hit very, very hard. And right off the bat, some names I recognize. I see Corsair Gaming, which is a popular pick on financial education. Got a low P ratio. You're close to 52-week low. Maybe Corsair Gaming's something. If you're interested in maybe a solar stock that's been beaten down pretty good, Canadian Solar's also near its 52-week low. Pubmatic, talked a lot about the ad tech sector on this channel. There might be an opportunity here. You've got Cohu, which makes diagnostic equipment for semiconductors. There's a lot of people who think this is a good value stock. So that's just a couple of the names that are on here. And it's really just about going through the list and trying to figure out, who has the most sustainable outlook for the next 3 to 5 years. Through this screener, these guys are getting crushed right now. So it's a good place to start in terms of at least seeking out value. All right, the next contrarian concept that you could sort through is really picking against the street. So looking at names potentially that are sells right now that nobody has any faith in, and see if you can find some value in picks like that. So for this method, I'm going to use SeekingAlpha screeners. And by the way, I just signed on in an affiliate agreement with SeekingAlpha, and they have provided a pretty significant discount to 40 Finance viewers. You can see the link in the description. And if you do decide to click on the discount link below, please note that I do get a small commission from SeekingAlpha. Thank you for supporting the channel. All right, so for this screener, we're really looking for who's bearish on a stock. I mean, this is total contrarian play. This is not based on valuations or anything. This is just like, hey, people are negative on this stock. And it makes it easy to do in Seeking Alpha. See, I got United States again. For this one, I'm just going to go information technology, just to pick a sector and kind of condense the list a little bit. And they have ratings across 3 buckets. They have a quant rating, which is obviously their algorithm that goes through and rates stocks. You have authors rating, which is really the folks that write for Seeking Alpha. Quite honestly, not much different than people like you and I. And then you have Wall Street analyst rating. So these are supposedly the pros, right, that have come out and left a rating for a stock. Now, you can sort by any of these things in Seeking Alpha. You can do quant, essay, authors. For this video, though, I focused on negativity in Wall Street, who has had the most bad reviews, so to speak, over the past 30, 60 days. And with Seeking Alpha's sort of color-coded system, you can kind of eyeball a handful of categories and see what might be worth looking at. You know, right off the bat here, Palantir, which is a stock that I own, so I guess I'm already in this contrarian play, got a low quant rating, got a low Wall Street rating. You've got some momentum, EPS, valuation scores that are flashing red, but you do have an A+ on growth. Now, I know a lot more about Palantir than just what is displayed here in this row, but you can see how it would prompt you maybe to look at this one more, depending on if it fit your criteria. We talked about solar earlier. You got SunPower Corporation, Appfolio, Fastly, Paychex, ADP. There's a lot of companies in here that I do recognize. GSI Technology, Xilinx is in here, C3 AI. So plenty of ideas in here from a contrarian standpoint where you can kind of put your bets against the pros, right? People are down on some of these stocks. I will say that on this particular sort, the worst rating was Xerox at 2.0. Theoretically, you can go lower than this, right? You can get a 1 as far as being very bearish. So at least in the IT sector, you know, a lot of these oranges aren't super duper bears. They're more like neutral calls. But you just have to go through the list and see which ones attract you. All right, another contrarian indicator that you can use is momentum. You know, we saw a ton of momentum plays do well coming out of the pandemic. You had the sort of the bottom of the market in March of 2020, and nearly everything went up. And even in 2021, though, I'd say there's been more than our fair share of stocks that have caught the winds of momentum and carried it to valuation places that, frankly, I was very surprised to see. So we'll use Seeking Alpha here. And for this, I'm going to focus more on the large caps and megas. This is just one that I created. See here where United States market cap 10 billion to over 10 billion. And then the rest of them, I just did the full scale so that I could sort by them. So this is your list sorted by market cap, which is just basically every stock that's out there. But we want to go to this momentum column, and F is about as low as you can go. So who has low momentum? A Peloton, no surprise, but at this level, is it worth an investment? That's what you have to dig into and convince yourself. Zillow is one that I have bought on the low momentum and will likely add more. But with Zillow, the vast majority of the market says, bad idea, low momentum, we're getting out of this one. So it just depends on sort of your risk assessment of things. You've got Dell, DraftKings, another low momentum name that I own. DocuSign's been in the news a lot lately. Lyft, there's obviously a lot of swirl with Uber and Lyft. You know, are their businesses getting back to regular times, or is Omicron going to destroy that as well? We'll have to see. SoFi, low momentum. Ally, Chewy, Discovery, Pinterest. There's a lot of interesting names in here. PayPal, Palantir. And again, not saying that these are all winners. I mean, they're at the lowest momentum points across all large and mega cap stocks, right? But of course, one type of contrarian play is to get in while they're low, and hopefully you carry with them as they go up. All right, so we covered a few contrarian categories that, in my opinion, would be good places to look if you have any interest in the buy low, sell high model, right? You're gonna have to buy when fear, momentum, all those things are at their bottom, and perhaps for some of the stocks we looked at today, that could possibly be the case. Now, as a bonus, I'll throw in a couple ideas that I've been thinking about that I haven't really moved on them yet. But number one, if you will, is just like the real estate market in general. Real estate, interest rates, everything is so negative from a media standpoint, right? They talk about housing crash, they talk about companies like Rocket, which I own, they're just going to fail once interest rates go up 0.25%. And I'm not buying it. I'm really not buying it. For me personally, I think the housing market has a way of settling itself out. And quite honestly, you see strength in the home builders. I see strength in the number of buyers that are looking for houses. And I do agree that housing prices could easily come down 5, maybe even 10%, but I think the actual cost of buying a home might stay about flat. So the thought of a cataclysmic, housing price crash, I don't see it, assuming that the world is operating at a sort of normal pace, right? Full employment, regular prices, not inflation to the nines. So keep an eye on the housing sector because I think there might be some opportunities there. And then my final idea, which I'm following very closely, is the crypto market, right? It feels like perhaps we're reaching that fork in the road. If high growth names in the stock market are getting hit, it really wouldn't surprise me to wake up any day and see maybe the cryptocurrency markets take a hit too. And therein lies the fork in the road, which is, do you jump in, right? When the prices do get hit hard, do you jump in with the promise of the future and what all the crypto bulls will tell you? Or do you pass on the opportunity because you're kind of like, I told you so, cryptocurrency is worthless, right? I'm more leaning towards the fact that I might take a gander at any sort of price discounts that go on. I've already started a small crypto investing account over at Voyager. That's links in the description too if you want to get like $25 in Bitcoin. And at this point in the game, it's obviously, speculation to the nines. But what happens if we saw like a 20% hit to crypto, maybe even 30%? We know how volatile it is. I frankly would be inclined to buy that and take my chances, at least with a reasonable percentage of my portfolio. All right, guys, so there's a few contrarian plays to think about during this stock market. Let me know what contrarian ideas you have in the comments. We'll see you on the next video.